Good afternoon, everyone. Hope you're well. It is a Wednesday. We're in the middle of the week. It is the 14th of January. We're nearly in the middle of the month, and I hope things are going well for you. Really interesting day yesterday with that big move against the yen. We were fully exposed, or I was fully exposed, full risk on on that track. We pushed the stop loss up, or we dragged the stop losses up as the yen weakened, and they've reversed basically. Most of them, I think all of them, have been closed out this morning as the market reversed. So I probably got a little bit too tight with the stop loss, but there you go. It was end of day, and I was looking at the hourly and the 4 hour chart. But that's trading for you. I've got next to me here at the moment. Obviously, we're going to talk about PPI in a minute. It's up in 12 minutes or so, and we got retail sales. So lots to get our teeth into. Big earnings. The big Wall Street banks reported yesterday, or started to. The biggest of them all, JP Morgan shares were actually down 4% last night, even though they beat, and it's just a derivative of excuse the pun of what market expectations is all about. But I just want to show you another one. This is the euro sterling, which we posted as a long position last night, and we got in. This is for yeah, we got in about 9 o'clock, I think. Anyway, we were filled here. I put it on here on the trade locker at 87.70. Basically, my stop loss was a bit more than this. I've dragged this up this morning as I came in this morning and looked at from about 7 o'clock this morning. It was looking a bit iffy, and then the 8 o'clock candle went. Got quite close as well. The original stop loss was much. Look, let's just go back to the. It was basically in the enthusiasm of the let me just get. Actually, you can still see that, can't you? So this is the euro pound. So we went long here. This is daily time frame. This is the trade we went long on last night. Initial target here is just shy of 0.87, the 20-day moving average. But you see, it's in a downtrend, so it's very much against the trend, against the higher higher trend. So if we look at it's with the higher trend. If we look at the weekly. This is how my system works. Not living you into any secrets. So the higher time frame, the higher time frame, the weekly is still clearly still in a downtrend. So I said uptrend now. So that's very much a downtrend. The one above that is obviously the monthly, and I always look at that's key as well. So the monthly is clearly in a downtrend from this high we got in November. So it's very much against the higher time frame. Trade, so I'm obviously well aware of that because so on the daily time frame, so even the daily is down as well. But the system triggered, follow the rules, take the trade. You never know what's going to happen because we make our money. Remember, guys, and this bit here, this white bit on the chart or the black bit on the chart, depends how you got your chart set up. This is where we make and lose our money, not what's happened in the past. And that's one of the big criticisms that people level at me about technical analysis, about it all being pointless and what's the point, of these charts and these patterns and these candlesticks and blah, 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 or all your old-fashioned indicators. All of that is valid, absolutely. We make our money in the white bit of the chart or the black bit of the chart or the blue bit of the chart, this area here. So this, all technical analysis suggests is that this is still in a downtrend, so really be taking short trades, not long trades. So I'm well aware of that when that triggered last night. My systems proved very successful over the years, so I've complete belief in it. We tweak it from time to time, but it's worked really, really well, and it's yeah. Anyway, enough about that particular system. So it's against the trend, also because I'm aware of that. So if we come down to the 4-hour trend. So this is the 4-hour trend. This is what we got in last night. So when I sort of looked at this first thing this morning, it's 6 o'clock, 7 o'clock my time. The candles were down, so the 4-hour candle had gone all the way down. So we come down even shorter time frame. Remember, this is a daily time frame. So really, I should only be looking at this, once a day or at the end of the day. Where are we? So it's a set and forget strategy. So the original stop loss here, you can't really tell here on the hourly. Go back to the daily. Sorry, I won't talk over the data coming out, but I just want to get this cleared up. Sorry, let me just make my huge head a bit smaller. It's better like that. The chart's a bit bigger. There we are. So this is the daily time frame again. We said so. The stop loss originally was down here somewhere, just above the bottom of the Bollinger Band. So in my enthusiasm, again, we're all human. So, I've been doing this for 30 years, but I still, make mistakes. In my enthusiasm, I was dragging all my stop losses up on the yen crosses this morning. I pulled this one up as well, quite tight. And then what happened here on the 1 hour chart? So here at sort of sorry, it was this one, wasn't it? 7 o'clock. So I pulled this up to here this morning. This last low here. So when I went away, I looked at. I'd already done my yen things. I went off, took the dog for a walk, went for a run, I went for a coffee. And when I came back just now, sorry, I came back about 9:30, and it was like, oh, what have I done? Why have I moved this already? Didn't do it. I sort of left it and went away again. Got cleaned after my run and everything, and a couple of hours later, we're back up to. We're still out of the money, but we're back up sort of where we were last night. And again, so it's against the trend. It's a pair that doesn't really trend very much. It's the euro pound. I mean, it used to be much more benign, but it is moving around a bit more now. System and trigger, so you take the trade. So again, this is where we make our money. It's out of the money at the moment, so we're just leaving it alone. And I still may regret pulling stop loss up a bit too tight based on the hourly chart. But anyway, we shall see. It's not going to lose very much. 86.70, 86.55. So it's only 15 pips if we get stopped out. And the key thing is that this is not going to lose me an awful lot of percentage on my account. And that's the most important thing. Think in percentages. I know that this will get me about 2% if we get to 86, 90 plus something. And then that's our first target. And as you know, we trail stop losses up. And we'll come back to the yen crosses in a minute because we've had a really rock and roll start to the week. We were up 16 points on Monday, and we were up 228 points yesterday. So we're up 245 points just on the FX crosses so far this week. And I haven't added in all those second positions on the yen. They weren't all successful. One was actually stopped out. I think for a loss. I can't remember which one it was now when I looked. But anyway, there we are. So what's happening this morning? Well, we have all sorts going on. The calendar is all about to drop in about 5 minutes. We've got PPI and retail sales figures 6 minutes there. You can see that on the chart. Yesterday's CPI came in line with expectations. In fact, it was a bit better than expected. And Trump is rather embarrassing speech in the Ford plant, or where it was, in the Economic Club in Michigan, or wherever he was. Unbelievable comments about Biden, man dying. Yes, he was his arch political rival, but the man's got no humility at all. But anyway, obviously bigged up the CPI data. It's not. It's not moving up; it's moving down. We need to cut rates. He's again banging on about his tariffs and why are we paying income tax? And back in history, I mean, he has a bit of a point. Some would argue, but we'll see. How it all pans out. But some commentators yesterday, I think it was on. It might be in CNBC. There was some commentator saying we have reached peak tariff. Inflation impact. Nobody else has said that, but it's the first person I've heard say that from one of the Wall Street analysts. So that's really something that the administration in Washington will love to push forward. That the impact of the tariffs has peaked. This one-off increase has peaked. The goods of inflation has peaked. I'm still a bit skeptical about if that is the case. Well, if indeed it proves to be the case, well, Trump will have been proved right from the impact on inflation. So, the argument that the Fed have been really too slow was going to follow through as well. They should have cut rates earlier. However, obviously, some of the housing cost issues, shelter factor of the inflation data was still looking rather sticky. And as we can see here from a new home sales point of view, that's still pushing through the lower potential of lower interest rates. New home sales still pushing through. So remember, PPI, producer price index, important because it's what the makers of stuff, whether it's services or manufacturers, what they're paying and what they're expecting to pay going forward. So it's still obviously it's a look back issue. There's still the issue about how much dirt is in the data, given that the government shut down. And you can see here still with the retail sales data as well. So you can see there's the October data coming. We've got the December data. We've got that miss. So it's all still a bit of a mess. It's going to be February and March data where it's clean. So by the end of the first quarter, we should have some clarity on what the data is looking like. And inflation isn't starting to pick up by then. From the tariff point of view, when will it? And he will have a big song to sing at his State of the Union speech at the end of February. I'm no doubt, 6 weeks or so away. So that's what we're waiting for. Retail sales obviously has an impact on the seasonality of it as well. How the holiday sales have gone. Retailers, there was it Macy's? Somebody's gone in administration, I think, overnight as well. I can't remember. It's a big name, I noticed. So yeah, retailers, the footfall, the physical retailers are struggling quite significantly. However, interestingly, Walmart rallied quite well on Monday when everything else was falling. Stocks yesterday in the US closed down 13 for the S&P 500, 6963. The Nasdaq was down 0.1%, and the Dow, having been the best performer, was off 0.8 of 1%. It was off 400 odd points at one point. I say yesterday the earnings season started. JP Morgan, the results beat expectations, but it was that forward guidance that worried the market. So earnings per share were $5.23 compared to $5 a share, and revenue was massive, 69.61 billion compared to 45.65 expectations. So stock fell quite significantly on open, and it's remained weak, and it closed about 4%. So we've got Bank of America, Wells Fargo, and I think Citi report as well today. But more on that, I'll say in a minute. Let's have a quick look at the charts. Where are we at the moment? Obviously, I guess many of you trading euro dollar, but euro pan. But let me know what you're trading, what you're interested in, and we'll talk about that. Obviously. All right, guys. Here, elbow cuff. Why moving stop? Why moving stop loss? I want gold to fall. Hello, man. Guys. Why moving stop loss? Well, it's a trailing stop loss, my friends. It just locks in profits when we're in profit. Gold's going in the opposite direction, man, as you said there, slash you can. We've had all-time highs across the board in commodities. I was looking at tin today as well. Even tin's gone to all-time highs on London Metal Exchange today. Gold's up. Actually, I have to look at the chart. It's silver over 84. Sorry, let's look at the metals for you. We've got a minute to go, so we'll have a look at gold. So 6,300. So new all-time highs yesterday and again today for the mighty gold. 46341. It was 4639, I think it was. But this is the hourly chart. So it's gone higher again in the last hour or so. Gold 4641. The trend is very much to the upside. Silver's even more parabolic. 92.89 we trade at the moment. And again, if we look at this on the daily time frame, as we have done for the last week or so, it's just a bit too parabolic, one would argue. But don't fight it. So $58 here. Where was this? This is the 1st of December. We're up 26% just in January. So we are now the 14th of January, and silver has rallied 26% for 2026. So I'm not going to eat now. I've got a piece of toast and I nearly ate it while I was talking. So 91.60 silver. Don't try and catch the top in the commodity markets. Be very, very careful, I would say to that, slash, my friend. All-time highs, my friend. Not just new highs. These are all-time highs. You can't really tell on this chart because it doesn't go back far enough, even on the monthly chart, I don't think. It only goes back to 2021. But as you can see here, this is years range bound. We started to move last year, but what a move in this fourth quarter of 2024 and into 2025 and into 2026. So monster moves. So let's just go back to the forex market and see what how the dollar is going to react to the PPI data. Remember, CPI is more important, certainly from a intraday trading point of view, um, let's go back to the 5 minute here, the euro. If PPI is in line, it's going to be even more less of an impact on the markets. Now, I've lost my calendar. Yeah, 26%, absolutely huge. Yeah, metals, cryptos. Well, we'll come to cryptos in a minute. Slash, we have looks broken out. I've been tempted to dip my finger in the crypto market. I don't talk about my trading on cryptos on here, but that 92, 95 barrier has been broken. So I've opened a few positions long on Bitcoin. But let me just find the calendar again and find the what's come up core PPI. So it's hotter. This is hotter now. Then, sorry, no, hang on a minute. So core, I've got the retail sales numbers. So it's weaker again. So that's weak. That's in line. So the core PPI is weaker than expected. Obviously, it's delayed data. The for some reason the October data hasn't come out. I'll try and refresh that. I don't know why the October data hasn't come through along with the December data. So just on the PPI, just concentrate on this line and this row. So the monthly for December is weak. Remember, PPI feeds into CPI, so this is again suggesting that CPI may have topped at this 2.8, 2.7 where we are at the moment percent. So it's not a direct feed, but that's quite weak. And PPIs on the monthly basis, the wider measure is in line with expectations. Another piece of good news is better than expected retail sales figures. The core number again is coming 0.1 of 1% more than expectations. But if you look last month, there were that was halved actually from 0.4 to 0.2 of 1%. So it's much better, but that could be revised as well. So overall, it's better, but not as startling as it looks on that particular chart. This is quite interesting. The headline for the month has actually turned negative for last month from completely flat. So it's minus 0.1 of 1%. But this month's come in at 0.6 of 1%. So that's much better. So overall, the immediate impact of that is quite positive, and it may flip the, add to the yesterday's benign CPI data, inflation data that was sort of you could argue better than expected, although it came more or less in line. Strong house sales added to that as well later on, but stock markets fell on that originally. So the dollar or expectations for a cut, obviously it's not going to happen. Well, I'm saying obviously it doesn't looks virtually certain that there's something going to happen in January and March at the moment, but it might have pulled the likelihood of something happening in March a bit to be more likely. Remember, we were 50-50, and the Wall Street analysts were talking about no changes and cuts until June, and indeed some are talking about we're done already. There's no need for more cuts. And again, if some of the ideas that Trump's been kicking around in the last week or so, they're actually quite doing the opposite of cutting rates. This idea of capping interest rates on credit cards and housing, stopping corporates buying single-use houses and all the rest of it, all sounds quite quite liberal and democratic, doesn't it? Those sort of policies, but we'll see. Obviously, he's got his politician's hat on and trying to grab that middle ground and trying to improve his ratings, which are very, very low. So I wonder why the October data hasn't come out. It's just 61 days late. I don't know if I can't see that immediately. Why not? So the annualized number. Sorry, I haven't got the annualized number on here. So the annualized number is up for PPI is up 2.7% compared to what we expected, around 3% on this annualized number. So that's again, as I said, it's a positive number. So if we look at how the dollar has reacted to that, so the data came out just here. It's benign movements, even less volatile than yesterday's numbers, so a difficult one to trade. It's not a Although it's a high impact event, it hasn't moved the dollar particularly here. So if we look at the what's been going on today, dollar's been a bit on the front foot from yesterday afternoon. Sorry, day before yesterday, wasn't it? We've been moving lower, and we're at 1650 again. So this week's pivot really remains around this 1650. So literally, we're at 1649 at the moment. So that's really our pivot area where we've been. So this dollar rally, is it back intact? You'd like to see it testing down to the 1625 again against the euro. So dollar's up a tad, dollar CAD, just as an example, again very very flat here. So Looney doing better against the dollar. Yen, obviously, is um, a particular case. Obviously, looks like potentially we've had a intervention from the Bank of Japan as we got up here this morning towards 159.50. Whether that was just more likely to be just profit taking, we won't know for a while if it was bank intervention from the central bank in Japan this week. Yeah, I mean, it's still historically these are 30 odd year highs for dollar yen at 159, and chatter is obviously the round numbers intervening. There was talk about them intervening over the Christmas holiday. That clearly hasn't happened in low volume markets. That hasn't happened or didn't happen, and we'd have known that. But yeah, there's been quite a move for the yen today, and we'll come back to my yen positions in a minute once we've finished the news analysis. Aussie 66.80 again, sort of drifting to the downside again, but again pitching through this 66.85 area. We got that as a pivot area here for the Aussie. So we got to 67 yesterday and this morning. We haven't been able to hold it, and we're back down at 66.80. So we're at the sort of a weekly support area here. Next tilt down takes us back to the fifth here at 66.70, and then 65 here before we get to 66.50. So there's one there, there's a pivot area there, there's a pivot area there. So we're just for the Aussie, we're just like 10 pips above that at the moment. So we're still biased to the downside this week. So dollar's really holding its gains. Cable 134.46, similar pattern. We had that move against the dollar yesterday. It's peaked out this morning at 34.60 against cable. Again, it's rolled over. There's a bit of a pivot area, but interestingly, it's below that 38 fib level we were talking about yesterday. Remember we were talking about that range yesterday, and where was the break? Well, the break came yesterday afternoon as we moved down after we'd moved lower. So the low so far today was above this low from earlier in the week at 33.89, below 34. So we went to 134.15 before we moved up. And but again, the trends, this looping trend seems to be to the dollar holding up a wee bit. So dollar's come back a bit. So we'd expect stock markets to have rolled over a tad today. Oh, well, just got the dollar one. So Nasdaq 25,600. So down from earlier highs this morning. Yesterday we got to 25,875 before we declined into close. I said I think the Nasdaq was virtually flat. Yeah, there we are, 0.1%. I said, didn't I? And why didn't I? This is the Nasdaq 100, but we're lower again today. And that was yesterday. Was that yesterday's low? Opening there. That's from, we were trading the open, weren't we? Just that for now. Nasdaq sliding sideways here on the hourly chart. So still biased to the upside. It's broken out of that big down candle there this morning, but we could obviously be still an hour or so before the actual cash open, so we could recover. But obviously, futures are lower in the US this morning. The Dow was that big mover yesterday. We lost 400 points, I think, didn't we? 0.8 of 1%. We lost yesterday. That's the big down candle on open yesterday from the 49,600 level on the hourly chart. But again, it just flipped this up to the daily time frame, where we are looks like we may be running out of steam, but down day today, but it's still in this consolidation around about all-time highs, 50,000. It's such a big, huge psychological round number. It's probably too much of a push to get there for the first time this time. And that last, I don't know, that was a daily one, wasn't it? Let's get rid of that. That's from our short. Was that intraday trading? There we are. So yeah, you can see this bit of a consolidation here since the rally up on the 5th and the 6th at high. So we need to break below this level, the Dow, before we start getting a bit twitchy about moving lower. And obviously the 20-day moving average, the midline of our Bollinger Band there sits at 48,700. So 48,700 is big support. Potential big support for the down. But as you see, nothing goes up in a straight line. We've been going up in waves, as you would expect. So down we go, up we go, down we go, up we go. New highs this time. But we need to break above this line here on the Dow, 49,500, with some oomph to take us higher, and break below the 48,700 with some oomph to take us lower. So at the moment, we're still biased to the upside on the Dow. Most important of all, the S&P 500, 6,934. So the cash closed at 6,963. So the derivative is lower than our cash close yesterday, but we did get new all-time highs, consecutive days there. Friday, Monday, Tuesday, yesterday, intraday highs, but then we closed lower yesterday, and we're down again today, but we are above that previous double resistance area here. See the black line at the top of those last two legs. So that's our first potential support at 6,900, and then the next fib level, or the fib level of that last leg, comes around about there at 6,875, which is also a zone where the 20-day moving average sits down. So the key 20-day moving average 689T here on our derivative SPX 500 trade. So again, not sort of that clear consolidation you see on the Dow, but we are pushed to the high side. So retail sales better, PPI better than. Actually, the PPI annualized was 3%, not 2 points. So it was actually hotter on an annualized basis. I'll have to have a double check on that. So, but the monthly number was quite strong. So it's pulling stocks down a tad. But if the reaction is going to be more muted than we had from the CPI yesterday, it's really the other data, the other news that's flying around, the other geopolitical news. So what could move markets today? Well, as I say, we got earnings from just bring in earnings whispers. This is another nice free site, everyone. So I don't want that. Get rid of that. So this is today. Some of it already reported. Wells Fargo have come in better than expected. Again, big revenue beats there. Citi, interestingly, haven't reported revenue, or there's no revenue being registered here. Big beat. Sorry, let's just go through them in order. So in size, I think Bank of America is bigger than Citi. There we are, Bank of America. So 27.34 billion quarterly revenue is expected. It's nearly doubled that, 46.88, a bit like we saw with JP Morgan yesterday. But there's been a lot priced into this, and we've got a negative growth on earnings, even though the earnings is coming better than expected. So something in the detail, let's show you all this detail for Bank of America. So watch those shares when the cash market opens. Citigroup, $1.81 compared to 1.65, so better than expected. There's no revenue numbers there, so they've done better. And I say Wells Fargo, the smallest of the big five, 1.67 and 31.56 billion for their revenue, their sales numbers. So that's quite a good beat on the earnings per share from those two, and a bit of a disappointment there from Bank of America, the 98 cents compared to 96 cents, even though revenues were very, very significant. So the excitement and anticipation from the banking has been a bit disappointing. Hence, this movement down in the stock markets. I'd argue these are rest to come. Um, um, who else is to come? There's somebody today. Was Bank of Wells Fargo and City, and that's all. Okay, so that's pulling. I'd argue that's pulling our stock markets lower. Sorry, let me just make that a wee bit bigger. There we are. Um, um, order panel, and we need the don't want the trade panel. I don't want the order panel. I want the markets panels. What was after? There we are. So hence the weakness we continue to see in the stock market. More on to do with those earnings numbers. I would suggest than the PPI data, but it's just even though that was better than expected. So there we are. Let's just run through elsewhere. As I said, crypto has managed to break the 95,000. That's the story of the day. Managed to break the key 95,000 level into close yesterday. So we had a very strong day for crypto. Yes, Bitcoin yesterday. We've got the daily candle. It's a nice big, just re-alternate that. Nice big update today. That was a really strong breakthrough 92 yesterday. Sorry, yesterday I should say. Break through 92 yesterday. Big positive candle. That was enough. I sort of dipped my toe back in the trading of Bitcoin yesterday. Top of the channel we identified back at the beginning of December, over 92. We've done it before and come back down, obviously. But the size again, what really caught me last night was the size of this candle. It's sort of a tad bigger than the one we'd had on the 5th of January. So we've had this U shape, which is always quite negative, actually, an up and a down. But we followed through today. And the key thing, unfortunately, is that we haven't been able to hold 95,000. But the trend is sort of starting to move up, and we've now been in the upper half of the Bollinger Band, or over the key 20-day moving average now since the 30th of December. So all of January, we've been in the upper half of the Bollinger Band, which in itself is relatively positive. We had this squeeze on the Bollinger Bands here at the beginning of the month. It looked like we were going to, burst up and take out 95 and 100. Didn't happen. We then rescinded or moved down. Very small bodied candles the beginning part of this week over the weekend. But a strong one yesterday. So is this a fail moved up? Who knows? We can't really tell. We're sort of the breaking out. You can see here we've brought for two candles. Didn't quite break there. Very small bodied candles. That looked like really good stuff there on the 5th of January. Didn't happen. No retrace. Didn't want to go down. More buyers at 20-day moving average, and there's more buyers yesterday and into and through a first test of 95,000 for the first time since I think it's 16th of November or something. There we are, 16th of November, day before my birthday. So there we are. We've been over 95,000 for the first time since then. Obviously, currently back down. So still looking. Yeah, I mean, it was a good day. Yes, that was enough to get me in. We're a very small position on crypto, so it's not advice or anything, but I happen to be added to my trading account on crypto as of yesterday. So trading, not a buying and holding situation. So that's long. That yesterday. If we look at it's more of a trend following trade on crypto. I'll just take this up to the daily. See here on the 20-day, the 50. So that was, that support we found this week and yesterday. So we burst up. So that was enough to get me in yesterday. You see, there's still a resistance area at 95. But anyway, I'm long Bitcoin for what it's worth, my friends. So you obviously do your own due diligence and keep things. Where's my? That's Tony. Move this. My other screen. The other screen I've got on. I've got two screens open. So yeah. So we'll see how we go. Obviously, lots of geopolitics flying around at the moment. 2,500 people have unfortunately lost their lives in Iran, by all accounts, according to Western monitors. It was 2,000 yesterday. It's the highest I've seen reported. So hence the rally to safe havens. The gold. I'll just leave the gold chart on there. Today we could. It's very unlikely, I think, have some sort of reporting from the Supreme Court about whether the legality of Trump's the way he's done the tariffs, not the legality of the tariffs, but the procedures and the policies he's used to actually apply the tariffs. So, as he said yesterday, as Trump said yesterday on his affordability tour, there are other ways that the administration have got in hand to still keep them on. Most of them on. A lot of them are sectorial as well. They're not affected by this ruling that may come today. It's unlikely. It's more likely to be April or June from the Supreme Court. They move quite slowly, but anyway, we shall see how that all pans out. So it's swirling, lots of potential risk points. Again, we'll list them all: Iran, Ukraine, Russia, Taiwan, China. There's also all sorts of, obviously, Venezuela, Cuba. All sorts of things could impact markets. And some, like, as I said yesterday, there's one that the markets don't seem to have been particularly impacted by some of these huge, what geopolitically seem huge, or are not seen, but are huge events. They haven't actually had the impact one might have expected. But and then you add that to his blatant beating up of Jay Powell in public, the indictment from the Department of Justice. He said he had nothing to do with it yesterday. The indictment of the Department of Justice pulled about overruns on building costs. Well, you should look at his favoured his ballroom he went to have a look at when he was in that meeting with the oil ministers. He stood up. There was this huge room in the White House, and he stood up and went and looked out the window at the ballroom. That he said people couldn't come in, and he didn't like the. It was the CEO of Exxon saying it's uninvestable at the moment. Venezuela, he didn't like that answer, did he? But, anyway, we live in very, very strange times, and the old book of doing business and trade has been ripped up and thrown out the window, and he's tariff mania, tariff madman. But anyway. Gold continues to move up, and I will leave it there. If there's not any questions, let me just check. Actually, let's have a look at. Actually, it's long enough now. Let's have a look at the CME. See if we've had a move on the expectations for rate cuts. So this is getting firmer, if anything. And let me just check when this was last updated. So this was 7:01. We're now 53, so that's an hour or so ago. That's no good. Excuse me. Let's see if that's going to update. Obviously, we're not really interested in their meeting on the next week. Not next week, of the 28th. That's gone even higher, 97. So absolutely nothing happening in January on the 28th. They meet 27, 28. What did start to raise its head yesterday, and obviously part of that is this indictment, and that Powell was really quite clearly quite upset and quite adamant about, and had massive support from other central bankers around the world about what's going on, and even Republican senators. So he's probably called that wrong as Trump, but he likes creating chaos, doesn't he? Sorry, the thing I was going to say is it looks like, again, unprecedented. It looks like Powell might actually stay on. So he's most chair people of every other chair of the Fed, when they've come to the end of their tenure, have not stayed on as a governor. It looks like the likelihood of that happening has increased quite significantly. So he's going to still have his say on the Fed, whether he's a voting member or not. So I've brought this up to see what the likelihood of the April move now. So Um, Nothing happening in January. The March was also not a lot happening. So 72% chance of no change, a 26% chance of a 25 basis point cut. As you say, that's remained fairly steady recently. So we were as high as 41% chance of 50 cut. 25 base cut in the March meeting. So April now is when we could see, yeah, so that's 60-40 now, if you like, 60%, only a 60% chance of that, not only, but 60% chance of that still not, the rate still not being cut at the April meeting. But, this is starting to peak up as well, a 5% chance now. And remember, this is significant because it's real cash, real skin in the game, these options positions. So a 5% chance of a 50 basis point cut by the April meeting, whether that's in two 25 basis point cuts or a big 50 point cut by the April meeting. So it's 60-40 now in favour, still in favour of no cut, even at the April meeting. And by June, June still is the favourite. Yeah, so only a 30% chance, or less than a 30% chance that we won't have a rate cut by June. Um, and at least 25 basis point by the June meeting. But we're still obviously a long way away. Lots and lots of things can happen between now and then. We obviously have a final meeting for Powell as chairman on the 27th, on the 29th of April. So he's got 3 more meetings. We were expecting as early as this week, or before Christmas, some announcement about central bank, obviously the invasion and the abduction of Marauder in Venezuela, sort of kicked off the new year with a bit of a surprise, and so that's put the central bank situation on the back foot. Then we've had this indictment, which has put it back on the front foot. So, are we going to get an announcement from Trump about his preferred chair elect or nominee to do as he wants, basically? But we'll see if that actually happens in real time. Ironically, I mean, Powell was a Trump nominee. You'd never think that now, would you? The way he talks about him. But Slash is saying here, I think Bitcoin needs one more long liquidation. Quite possibly. As I say, interestingly, I'd say on that, Slash, is the way we've. I'm no crypto expert at all, but just looking at the way the chart traded today, if we just go back to the hourly chart, there was a rally, quite a strong rally to it's not marked on here, but just put 95 on here. It's quite a strong rally through 95 yesterday. That's not, I call it, yeah, that big thick one. We 90 was good as, yeah, it's as good. Let's just make it. So when I come back to this next time, it's on here. 95,000. 95,000 is what you want your full. Okay, and let's just fix that, lock that in. So there, it was quite a strong push, wasn't it, through 95, and then we came back to hold. It looked like we were holding it, but today we're sort of messing around here on the hourly chart around the 95,000. So really interesting to see what the daily candle looks like at the moment. But if we go up, so if we go up the time frames, it'll still look quite positive. So strong move here in the 4-hour from yesterday, big old move up, and the daily, as we said, as you saw earlier, bang into 95 on an intraday basis. So you can see, yeah, big flat top there. So, but this is now very wedgy, isn't it? If we just put a trend line here, so it's not wedgy, but it's not particularly steep, is it? So if we put it, actually, let's get rid of that. Draw it from the bottom of that wick. Let's get a better. It's 80. There we are. I'm one of the worst draws of trend lines. Ask anybody who's worked with me, Andrea. You know what I'm talking about. You get the point. So, it's a big flat top. So that should, technically it should break out to the upside, and to say that, that distance is how far we could travel. That will take us back through the 105,000. And remember, we were talking about 112,000 a lot last year as well. Why has that popped up? Go away. So yeah, you might be right. But it's it's one, two, three tops at 92,000. We've broken through. So that I'm still happy to have taken that long from last night. Slash, I don't know how you're trading this, whether it's on an intraday basis or other ways. I don't know. Tristan, hello, my friends. Hope you're well. Have you got anything to add or anything you want to add? That was 5 minutes or so ago. You guys, unless you guys are talking to each other. Let me know. See what you're trading. If not, we'll wrap this up now. I've been here 45 minutes. I was going to show you the my what's it trades, wasn't I? The open positions trades panel. What trades panel? I want the markets panel. Right. Let's just go back to the Bollinger Band stochastic set. So let's just have a look at the yen positions, and there's my moving of the JPY. Position. So let's just go through them, shall we? So let's have a look at the on the 4 hours, please. Yeah, right. So we were long here. Our Swiss yen on the close on the 26th rallied to target one very, very quickly. I can't remember which we made on the yen. Was it Swissy? Was it 40 pips, 80 pips we made? Stop loss was down here. We'd rammed this up yesterday, so this has been stopped out this morning. So this is our entry here. So we still got those pips to add on to there. So we where's that? That's whatever that is, 98.17. We got out 98.20 something. So there's another few pips to be added to that one. So again, as I was saying to you at the beginning, about I probably got a bit too aggressive with the stop loss, but we had a fantastic, we'd had a really strong run. If we go up to the daily time frame, which is how we trade this particular setup, we'd had a low down here at 196.12, just using the Swiss yen as an example. Strong day, bursting through. So it took it intraday, took us out of our first target, and we've come back on the but the stop loss has been rammed up above our entry. So I don't want to give anyone pips back, but stop loss really is a should really been round about there still. But it was such an aggressive move, and the reason we did that, you can see this is very much an uptrend here on the daily. But if we go up to the higher time frames, look at the weekly, and we're just using the Swiss as an example against the yen. It's broken out of this range here from the fourth quarter of second half of 2025, and it's been rallying for the second half of it's the first half of 2025, so all of the second half of 2025. So this is still very much in an uptrend, but we pushing highs every single week or every other week. So we got a down couple of weeks and then we're back up. So let's not get too greedy. We're trading it on a daily basis, not a weekly or monthly basis, but this trend is very much still in play. Intervention from the central bank, the Bank of Japan, could not really going to have a big impact on this move. So that one, let's go back to the 4-hour positions. You see all the ones. Yesterday's down candle, so that was already closed. Kiwi yen. But again, see a really strong move here on the 4-hour time frame. Again, on the daily, we only got in here lots of pips, or not so much pips actually on the Kiwi, was it? It was 50 pips, I think it was. But still, all bagged it. Ironically, the dollar yen didn't trigger. Again, it's suggesting weakness, the continued longer term issue, weakness around the dollar. Euro was a good one as well. Again, it's reversed really aggressively this morning. That's at 6 o'clock. I pulled all these up earlier this morning. Actually, this is a good example of what happened. I came in this morning and it was here the 8 o'clock candle, but it was here I was doing all the pulling up. So the stop loss was pulled all the way up to the T1 mark. So we got half of it out at T1. We got the other half out also at T1. So some people said to me, "Well, why don't you just take it all off at T1?" Well, when a trend starts to run, it can run. But you can see here, this is why I was saying before, it looks like there may be some Bank of Japan intervention because of the big move down. But again, we've had such a big rally. We've got this top forming here, and see obviously the players that got in down here and down here on this first retrace have rallied it and pushed it to this area here. The chat about the elections added to the move. There's obviously been some news this morning, overnight, or while I've been out. I haven't seen what that is, but lots of yen buying potential. We've been all the way down here to our entry level from where we were on the 12th, 184 as well today. So clearly something significant has happened around the yen this morning, which, so what? I've pulled the stop loss up. We've bagged our profits and we've protected our profits. You never get out the top of a market, but it's a really good example of why you trail your stop loss up, or why I do. It works for me, works for many people I know that trade professionally full time. Doesn't work for you. It doesn't work for you. I'm not arguing with that. CAD was the same. We'd had two positions here, but interestingly, the one we got long last night is actually closed. Stop loss. The stop loss from last night I'd only pulled up at this 7 o'clock area this morning, and so that's meant the loss is actually relatively small, and the stop loss on the 12th of trade was higher. It was still here, so that was at T1 as well. So that's got us out at T1 as well. And again, you see the big intervention here at 12 o'clock. Interestingly, candle, so something has gone on around the yen today. So that's all closed out. And finally, the Widowmaker, or the Guppy, pound yen, similar pattern. Entry here. Stop loss was pulled up this morning. When I first looked at this on the 7 o'clock candle to T1, and that's trapped in, taken out on the big reversal while I was out. So I'm a happy bunny on that yen move this week. But we started on Friday night, didn't we? We added to it on Monday. And Bob's your uncle. There we go. We're out. We're done. Thank you very much. Pips in the bag. Look for the next one and see what tonight brings. As I said, the one from tonight, or the other one from last night that we took was that one we talked about earlier, euro pound, which is still out of the money. Last time we looked, wasn't it? It's moved up, moved back down. So as I say, I was looking to close this out earlier, but stop losses come from there. I'll just leave that and see how we go, because it's literally, isn't it? We're only into day one of a daily system that triggered on an end of day basis. So it did. I can't quite see why it did, to be honest, but it did. There's clearly a bit of a resistance through here on our entry, but it's decided it wants to move up. So, but that looks something like rejection of higher prices the last 3 days, didn't it? But we'll see. It looks. If I was betting man, I would say that would be a losing trade. But let's see what happens. It can turn around. Never know. It's an end of day one, so set and forget. So do exactly that. For tonight, let's have a quick look. What's happening tonight? I can't see my platform's not opening. I'll post it later. My my actual trading platform's not wanting to open at the moment here. So I'll obviously post on Discord. Those of you that are following or interested or not, it's obviously all your call. I'll put it on here. So the main one is the trade chat. There's the stop losses from this morning. Literally, I posted that at 7:45, so must have been like minutes later that action happened. But anyway, such is life. What was I saying? Yeah, so I'll post them all here. What I do. Some people have been joining me. Unique one's a bit of a scalper on the gold market. He had a loser, but then he had a big winner as he went short. He was going to go long, but he went short. So I mean, guys, just again, the moderators will take your comments off if you're not posting it before you do it. There's no point in posting. Look what a great day I've had afterwards. That's all well and good. Anybody can do that. Remember, as I said before, we make our money in this white part of the chart. So keep your eyes peeled on here. So the trade chat channel under trading is where I post the trades we do on an end of day basis. General chat is for all the information you need from the support team. And the support team, I can't speak highly enough of them. They're very efficient, very quick, very pleasant, very polite. So we're here to help you guys. Anybody can do this trading business. If you've got any questions at all, please ask me. We're here to help, my friends. Okay, remember, our promotions are always there's always something going on. So um, 30 off is still pride, 30% discount off full price for a flex account. Understand the different types of accounts. You've only got a target of 4% with this flex offer. The one we launched this week was 26% off for the 2026. So that's code New Year 26 or NY26. Gets you 26% off the classic accounts, either one step or two step, traditional prop trading accounts. 20% discount off all our accounts. And the other big benefit is you can keep 100%, not 80%, not 90%, but 100% of the profits you make through the classic account. That offer expires in 4 years at the end of trading on the 18th of January. So come and give it a go. If you want some help, want some guidance, we're here to help. Okay. Take care. I will see you tomorrow. It's Thursday tomorrow. It's weekly claims. We've also got, I think we got Empire State tomorrow, haven't we? Again, I can't find my calendar now. Where's the calendar gone? I've lost it. There's the calendar. Tomorrow, weekly claims, Empire State and Philly Fed tomorrow as well at this time. So join me for that. Might see a bit more volatility. So just have a quick refresh of this. Oh, it has. So the previous of the October, where's the October stuff gone? It has come in line. So it is weaker than expected as well. So it's all, so CPI, PPI have all come in at weaker than expected, although the annualized numbers 2.7% from 3%. So and retail sales were positive as well. So good data really for the US so far this week. So watch this space. But stock markets are down on the not the misses, but the banks, the finance, the big Wall Street banks beating expectations, but not as much as many had expected. So you pays your money, you takes your choice. So see you soon. Be good, be safe, and be kind to everyone. All right, take care, everyone. All the best. See you tomorrow.